We are entering into one of the biggest layoff seasons that we have seen in the last 20 years, and it just started, guys.
And here we go.
I know. You're saying, Orlando, it just started. I know it is so crazy how this housing market and this economy is going. Just last year, we heard about individuals deciding to work from home. We heard about individuals saying, I'm going to quit my job because I have so many options. And now we're in a cycle where companies are doing mass layoffs, guys. That's right, mass layoffs. This is what I call the start of a housing crash. But before we jump into it, guys, let's talk about this. A lot of times people may not understand that the reason why jobs are so important is jobs make the world go around, right? When it comes to our economy, the US economy, jobs push everything. I can't invest in real estate. You can't buy homes. Darn near everything cannot be done in an economy that does not have jobs. That is reason why jobs are so important. And when you have massive layoffs happening, it's a red flag that the economy is about to go through a massive downturn. So remember, throughout this video, jobs equal people buying houses. No jobs equal people not being able to buy houses. No jobs equal the economy going into a recession. No jobs means the housing market crashes. That is what is going to happen. Now, I know what you're thinking. You're thinking, Orlando, what are you talking about? Massive layoffs? Like, let's see the proof. Well, I have the data and proof for you guys. Let's go ahead and see what we're talking about here. Let's jump first. Rocket Mortgage. Rocket Mortgage is laying off their employees, guys. Here are some examples. Rocket Mortgage is laying off their employees, giving their employees an option to buy out of their job before they fire them. They're literally saying, hey, you either take this buyout, and if you don't take this buyout, we will be forced to fire you. Now, they're not saying that, but I'm reading in between the lines here. If you don't take a buyout, if the people don't take a buyout and they don't see a certain amount of people get cut from that buyout, what are they going to be forced to do? Lay people off. So let's see it here. It says Rocket Mortgage employees faced with buyout option as company seeks to shrink workforce. Now, why would they want to shrink their workforce? Well, that's because interest rates are going so high that they realize that no one will want to buy a home. The demand for buying homes will just go poof. It's going to be gone. No one's going to want to buy a house. No one's going to want to refinance from a 3% loan to a 9% loan. No one's going to want to do that. Hundreds of employees are faced with a big decision this week after Detroit-based Rocket Mortgage announced it is asking some of its workforce to accept a buyout on Monday. Following a recent decrease in the mortgage market due to rising interest rates, roughly 10% of 26,000 employees for Rocket Mortgage were given a voluntary buyout option in an attempt to reduce the company's workforce. See what I'm talking about, guys? If you would have saw my videos that I did before, where I said you will start seeing people getting their jobs cut. And when you start seeing massive layoffs, are you seeing companies preemptively trying to inch towards getting rid of a workforce? This is when you should be worried. And we're right there, guys. We're right there. And this is important. Let's jump to another company here. Good old Robinhood. It says Robinhood shares plummet as a company announces layoffs. If you don't know, Robinhood is an app that you can use to, buy stocks and crypto and all this other stuff. Most people know what it is. It says here, the Robinhood CEO announced Tuesday afternoon that the online trading platform will lay off 9% of its workforce as shares of the company stock hit a new low. Now, obviously, we know what happens. Interest rates go up, inflation goes up, stock market is going down. So what is happening? Companies are losing so much money as their values drop. What is the number one thing that companies do to get back into the black? The easiest thing they can do is cut employees. And that's what they will do. They will go in and gut their workforce because they're trying to keep their bottom line positive, right? They don't want to borrow money. They don't want to take on more debt. The easiest thing to do is cut off employees. Robinhood's financial position was strong with over $6 billion in cash on its balance sheet. The layoffs, he said, following a period of extreme headcount growth that led to some duplicate roles and job functions, and more layers and complexity than are optimal. What does that mean? Well, that means that we're losing money and we need to cut some people. It says Robinhood has increased its staff from 700 to 3,800 employees since the beginning of 2020, guys. That was a couple of years ago, and they had the massive boom with the GameStop and AMC stuff, right? And they added more employees on. You know, this is what you're starting to see. Let's go to the next example. Netflix says angry Netflix employees take to Twitter after getting laid off from streaming giant. Now, these guys didn't even get a notice. Angry Netflix employees took to Twitter Thursday after learning they had been laid off at the streaming giant, home to hit shows like Squid Games, blah, blah, blah. Although the exact number of layoffs could not be immediately learned, many of the employees were writers, editors, and XYZ. Now, if you didn't know, Netflix had a huge drop in their stock. I think it was 30%. Which is a massive number, a massive number for a public company for their stock to drop. Their stock went down 30%. So once again, what is a company going to do when they lose that many people? Well, they're going to cut. They're going to cut employees. Easy, easy, easy. And you can see the writing on the wall. Let's go to the next one. We got Bose. Bose has decided to lay off a bunch of people too. And we got to remember, these are all recent. These are all within a week of each other, guys. Layoffs hit Bose as the company focused on its most popular products. So they are cutting their losses. They're losing money on their stock. They can't take on any more debt because it's more expensive. So it's just easier to cut off employees. The Birmingham-based firm most recently cut its workforce by about 245 people in March, and its headcount has been shrinking at a rate of 1,000 people per year since 2019. They're cutting. I promise you, by the end of this year, Bose will probably cut another 1,000 people. Then we have, last but not least, we have another company, a pharmaceutical company. It says that this company confirms thousands of layoffs loom as its global reorganization rolls ahead, guys. Now, again, it doesn't really matter the details. The point is that I'm trying to get across to you guys is that we have these massive layoffs that are continue to roll, and it's going to roll downhill. Now, this is going to be a scenario where if you don't have your stuff together, if you're trying to, like I did on the last videos, you're having a hard time paying your property taxes, or you overpaid for a home right now, you are going to feel the pain, and you have to make sure that you have a solid job, a solid place in your job. I did a video about a month and a half ago where I said you can't go in overpaying for these homes and you don't know where you sit at your job. Now, a lot of these people went in and bought these expensive homes at $100,000, $50,000 over, even $40,000 over at an already overvalued home. And then now they're going to lose their job. Remember, I said before you buy a home, you need to make sure you are secure when it comes to your home. A lot of these jobs are getting replaced by AI. A lot of these jobs weren't secure to begin with. And hear me out on this. With a recession that has been looming, that everybody and their mom, especially if you've been watching my video, knows is coming, and we've been seeing red flags since the middle of last year, all the way up until this exact date right now, today, to know that this is coming and still make a decision to drain your savings account to overpay for a home. It's just not financially responsible. We all know what companies do when a recession is coming. We all know. Just last week, I talked about Wells Fargo and how they're firing a bunch of people also too because of mortgage rate increases. And I've told you guys, in this industry, banks are really the first ones to know exactly what's happening. They have the finger on the pulse, and you will see banks, Citi, Chase, all these guys will start laying off people because they know what the economy is going to spell out for everyone. And the housing market is no different. Please, please, please look at your job, guys. Look at your job. If you're trying to buy a home right now, think of all of the things that could go wrong if you lose your job. If you take an arm rate, you lose your job. If you overpay $100,000 and you lose your job. If you just buy a home, period, that is a little bit out of your range right now, or maybe your job is a little bit shaky, what possibly could happen? So as usual, this is for research, guys. This is allow you to make the best decision that you can make possible. This is not a doom and gloom. I am just trying to give you the most information that is available, up-to-date information, so that you can make the best decision for yourself if you want to buy, rent, sell, whatever you want to do when it comes to buying a home and getting into this crazy housing market. But I'm gonna need you to watch this next video here, guys. It will help you learn about this crazy housing market and get into your first rental property. Check out in the descriptions. I have a membership program and a bunch of useful links. I'll see you guys in the next one. Thanks.